Hello everyone, my name is Moji, you're watching a Bitcoin Bubble News channel. Or buy in and move the market, but when you get 5x or 10x more of the assets spread out, you have more. There's been a cycle of distribution in the past where long-term holders called whales will reduce their holdings during bull markets to make room for more liquidity. During bear markets, it usually goes back to the people who have the most Bitcoin, but every cycle, Bitcoin gets a little more spread out. It's kind of like how a startup company grows into a widely traded company. Over time, its holders become more diverse. And I think that once we reach a certain point, the volatility and uncertainty around the stock will go down over time. Lyn Alden recently did an interview on the Paul Barron Network where she talked about how important Bitcoin is, how Bitcoin and stablecoins work together, and PayPal's new Solana stablecoin Bitcoin is worth about $56,000 right now. It has lost 3% in value in the last 24 hours and 4% in value over the last 7 days. Lyn talks about Bitcoin's role as a digital gold and its ability to keep its value over time. She also talks about how stablecoins are becoming more important in everyday transactions. She talks about how these two assets can work together and what that means for users and investment. Enjoy the talk and don't forget to like, subscribe, and share this video. Let's hear more from Lyn Alden now, so I don't think this CPI report is all that interesting. Some things were in line with what everyone thought, while others were a little off, but nothing too shocking. 3% is obviously important to your mental health, but in the big picture, there isn't much difference between 2.9 and 3.1. I think that's the bigger risk for CPI as a whole. Can they loosen up on rules and still keep CPI low? On the other hand, budget deficits are a big reason for that. The fact that our debts are much bigger as a share of our GDP than they have been in the past, especially when the economy is growing. A lot of that is now pretty structural. In order to ease the stress on homes or small business loans, they want to bring interest rates back to a more normal level. The question is whether this will lead to an increase in energy prices or other things that cause inflation. So I don't see this as much of a case of can they get back to 2% to everyone instead. I want to know if you can stick the landing. Can you get it down to 2% and keep it there so that you don't have to go through another cycle in the years to come? More than once, cross-border capital has made that point. I've also thought that global liquidity is one of the most important factors that affects the price of Bitcoin. And when you measure it that way, there are really two parts to world liquidity. One is the rate at which payment is made, and the other one is the strength of the dollar. As I already said, a lot of foreign debt is denominated in dollars, so the global liquidity is often measured in dollars. So that part about the dollar is pretty important. Either credit can be made more quickly to make the world's money supply more stable, or the dollar can get lower around the edges, and that can make the world's money supply more stable because you're changing the base. So I do believe that we will have another good liquidity cycle in the coming years as central banks try to tighten. Things have been pretty much the same there for a while. I believe we will likely see another move up, and I think Bitcoin would do pretty well in that setting. As a general rule, Bitcoin and stablecoins have been the two most important crypto apps in the past, right? A lot of people have become interested in these two things. Even during bear markets and boom markets, Bitcoin is a new way to keep your money safe. The main thing is that it is a better form of money than most other money we know. But not many people hold it yet because it's still small. All of these things happen as people try to build influence on it. It changes a lot as it gets closer to its ultimate target market, or as it hits that market. Stablecoins are just digital dollars. The need for dollars or desire for them is met by this. So far, there are two main ways that stablecoins can be used. One is the main unit of account for trading and DeFi on different crypto platforms. A lot of that will happen on Ethereum. The other big use of stablecoin is to meet the need for dollars in the global south, which Tron does well for. It's almost like the same object exists in two different worlds, and stablecoins are great for short-term storage of value, like working cash. Basically, being able to handle fluctuation is a bit of an advantage. It's basically true that the more money you have, the more you can say, I'm willing to hold something for the next 4 years. Stablecoins, on the other hand, are like a checking account when dollars are useful. As we just heard, Lyn Alden talked about Bitcoin and how it competes with stablecoins. Let's hear her talk more about PayPal's relationship with PUSD and what that means for the stablecoin market. Alden talks about how PayPal's move into the stablecoin market could have a big effect on how users accept the technology and how the market works. She talks about the pros and cons of stablecoins, including how they can make transactions easier and lower volatility, as well as how they might threaten Bitcoin's power. Lyn gives an unbiased view by showing how Bitcoin and stablecoins can be used in different ways in the business world. Let's hear what Lyn Alden has to say on the Paul Barron Network now. Net effects have been proven to be important so far. It's almost like liquidity leads to more liquidity now. Let's talk about Tether's network effect. So far, this has been pretty amazing, and it's probably stronger than I thought. I've also been keeping an eye on some stablecoins that try to pass on the yield to the user instead of the issuer. You can think of them as tokenized T-bills. Of course, they've grown since then, but they're still not really taking over the market very quickly. Okay, it's clear that network effects are pretty strong for stablecoins, and I'm not sure how many there will be or how strong those network effects will be, because some of it is like the result of rules being too strict. Some local ones try to use the government against the offshore ones, and you go back and forth between them, so I wouldn't try to guess what will happen in some situations. Given how big and valuable the stablecoin market can be, I do think it makes sense for these different groups to try to get into it, but it's hard to say what will happen taking things as they are. I think Tether is a very strong place. A prime buyer these days has been more in favor of Tether than its competitors onshore. I don't think there have been any strong attempts to change that, so I think things will stay the same. I think that some stablecoins could continue to gain market share in the United States, but Tether is so far ahead in the world that it would take a pretty big change for that to happen, so I think the current trend will continue. That's what I think. It looks like the main use case here is foreign. Our payment methods are pretty good here in the US, but we have trouble when we do business across the border. That's why stablecoins have been so helpful, because of regulatory arbitrage. Some of it has been possible for things to be easier in banks as well, but they tend to have more red tape. To be honest, I don't really judge due dates that much. Also, as I already said, there are results related to bullying, the law, or lawmakers that I don't know much about, but I can pretty much keep being structurally bullish on the market cap of stablecoins. From what we've seen so far, it looks like the winners are benefiting from pretty strong liquidity network effects. I remember a long time now that it's been 15 years. I think that trend of less instability will continue for another 15 years. Basically, I think it's something that a lot of people believe. If a lot of people don't hold on to something, one big player can use power to blow it up and move the market. Click on the link in the description to see the whole interview. In short, Lyn Alden gives a detailed analysis of Bitcoin's current state and its ongoing competition with stablecoins. She stresses how important both are in the changing world of digital finance as we move forward. We'd love to hear your thoughts on a few questions. What do you think will happen to Bitcoin in a world where stablecoins are becoming more and more popular? What do you think the market will be like after PayPal launches its stablecoin? Glad you tuned in to Only the Savvy. If you liked this conversation, please follow, like, and share our video to see more interesting videos getting into the cutting-edge world of autonomous technologies.